Chapter 1. No one's crazy. Your personal experiences with money make up maybe 0.000000001% of what's happened in the world, but they guide about 80% of how you think the world works. Asterisk the concept asterisk people from different generations, backgrounds, and income levels view money through different lenses. An investor who saw the stock market plummet in the 1970s views stocks as a gamble. Someone who entered the market in the booming 1990s views stocks as a wealth machine. Asterisk the lesson asterisk when people make financial decisions, like buying lottery tickets or hoarding cash, they aren't being stupid. They are reacting to their own unique life experiences and trying to feel secure. Chapter 2. Luck and risk. Nothing is as good or as bad as it seems. Success and failure are often driven by outside forces rather than just individual effort. Asterisk the case study asterisk Bill Gates went to Lakeside School, one of the only high schools in the world that had a computer terminal in 1968. The odds of Gates going there were roughly 1 in a million. He had a brilliant classmate named Kent Evans who was just as smart, but Kent died in a mountaineering accident before graduating. The odds of dying on a mountain in high school are also roughly 1 in a million. One experienced extreme luck, the other extreme risk. Asterisk the lesson asterisk never assume 100% of an outcome is due to hard work. Be careful who you praise and who you look down upon, including yourself. Chapter 3. Never enough. When rich people do crazy things, it is because they don't know where the goalposts are. Asterisk the case study asterisk Rajat Gupta, former head of McKinsey, and Bernie Madoff were self-made multimillionaires. Yet, driven by the desire for more status, Gupta engaged in insider trading and Madoff ran a Ponzi scheme. They risked what they had and needed for what they didn't have and didn't need. Asterisk the lesson asterisk the hardest financial skill is getting the goalpost to stop moving. Do not let social comparison dictate your financial targets. Know what enough means for you. Hashtag Chapter 4. Confounding compounding. The human brain is not wired to understand exponential growth. Asterisk the case study asterisk Warren Buffett is famous for his investing genius, but his real asset is time. Buffett started investing seriously at age 11. If he had started at age 30 and retired at 60 with the same average annual returns, 22%, his net worth would be a tiny fraction of what it is today. Asterisk the lesson asterisk good investing isn't necessarily about earning the highest returns. It's about earning pretty good returns that you can stick with for the longest period of time. Hashtag Chapter 5. Getting wealthy versus staying wealthy. Getting money and keeping money require completely different mindsets. Asterisk the concept asterisk getting money requires risk, optimism, and putting yourself out there. Keeping money requires the exact opposite. Humility, frugality, and a healthy dose of fear. Fear that what you made can be taken away. Asterisk the lesson asterisk you must adopt a survival mindset. A good financial plan is one that accounts for the fact that things will go wrong, allowing you to stay in the game long enough for compounding to work its magic. Chapter 6. Tails you win. You can be wrong half the time and still make a fortune. Asterisk the concept asterisk a tail event is a rare, outlier occurrence that drives the majority of outcomes. In venture capital, out of 100 investments, a few massive successes, like an early investment in Facebook, pay for all the other 95 failures. Asterisk the case study asterisk consider the art world. Great collectors buy massive amounts of art. Most of it is worthless, but a few pieces, a Picasso or a Monet, appreciate so much that they fund the entire collection. Asterisk the lesson asterisk when you accept that tails drive everything, you realize it's normal for many of your individual investments or business ideas to fail. What matters is the grand total. Hashtag Chapter 7. Freedom. The highest form of wealth is the ability to wake up every morning and say, I can do whatever I want today. Asterisk the concept asterisk more than a big house or a fancy title. Control over your time is the biggest predictor of happiness. Doing a job you love but on a schedule you hate feels exactly the same as doing a job you despise. Asterisk the lesson asterisk use money to buy flexibility, autonomy, and time. It is the best dividend money can pay. Hashtag Chapter 8. Man in the car paradox. No one is impressed by your possessions as much as you are. Asterisk the concept asterisk when you drive a luxury car, you think people are looking at you and thinking you are cool. In reality, They ignore you and imagine themselves driving the car. Asterisk the lesson asterisk if respect and admiration are what you want, be careful how you seek them. Humility, kindness, and empathy will gain you more respect than horsepower ever will. Chapter 9. Wealth is what you don't see. Spending money to show people how much money you have is the fastest way to have less money. Asterisk the concept asterisk rich is current income. It's the visible things, the leases on expensive cars, the designer clothes. Wealth is hidden. Wealth is the income that is not spent. It is the investments, the cash reserves, and the assets that haven't been converted into physical objects. Asterisk the lesson asterisk the world is full of people who look rich but are living on the edge of bankruptcy, and wealthy people who look completely ordinary. Focus on building wealth, not looking rich. Hashtag Chapter 10. Save money. Building wealth has little to do with your income or investment returns, and lots to do with your savings rate. Asterisk the concept asterisk you cannot control market returns, and you can only control your income to a certain extent. But you have 100% control over your ego and efficiency, which dictate your savings rate. Asterisk the lesson asterisk you don't need a specific reason to save, like buying a car or a house. Save just to save. Cash in the bank gives you options, freedom, and protection against life's inevitable curveballs. Hashtag Chapter 11. Reasonable, rational. Aim to be fairly reasonable rather than coldly rational. Asterisk the concept asterisk academic finance models assume humans are perfect calculators who maximize math. But real humans have emotions, anxiety, and families to look after. Asterisk the lesson asterisk it might be mathematically rational to invest all your money in volatile stocks. But if that causes you to panic sell during a market dip, it wasn't reasonable. Choose a financial strategy that lets you sleep peacefully at night, even if it isn't mathematically perfect on a spreadsheet. Chapter 12. Room for error. The most important part of every plan is planning on your plan, not going according to plan. Asterisk the concept asterisk, this is the concept of the margin of safety. History is a guide to the future, but it is an imperfect one because it cannot predict unprecedented events, like global pandemics or unprecedented wars. Asterisk the lesson asterisk, never clip your finances so close to the edge that a single bad break can wipe you out. Always have an emergency fund, and assume your future returns will be lower than the historical average just to be safe. Hashtag Chapter 13. You will change. Long-term financial planning is hard because people change their minds about what they want. Asterisk the concept asterisk the end of history illusion is a psychological bias where we recognize how much we've changed in the past, but underestimate how much our desires, goals, and personalities will change in the future. What a 20-year-old wants, hustle and career, is rarely what a 40-year-old wants, family time and peace. Asterisk the lesson asterisk avoid extreme financial plans. If you save 90% of your income and never enjoy life, or if you spend everything and save nothing, your future self will likely regret it. Aim for balance. Hashtag Chapter 14. Nothing's free. Everything in life has a price, but not all prices are listed on a price tag. Asterisk the concept asterisk successful investing gives massive rewards, but it requires a price. The price is not paid in dollars. It is paid in volatility, fear, doubt, uncertainty, and regret. Asterisk the lesson asterisk when the stock market crashes and your portfolio drops by 30%, do not view this as a fine or a penalty for doing something wrong. View it as a fee, the ticket price you must pay to get the market's incredible long-term returns. Chapter 15. You and me. Beware of taking financial advice from people playing a different game than you. Asterisk the concept asterisk a day trader who buys a stock expecting it to rise for 10 minutes is playing a completely different game than a retirement investor who plans to hold that stock for 30 years. Asterisk the lesson asterisk price bubbles occur when long-term investors start taking cues from short-term traders. Know your own game. Define your time horizon, and ignore the noise of people playing by different rules. Hashtag Chapter 16. The seduction of pessimism. Pessimism sounds smart. Optimism sounds like a sales pitch. Asterisk the concept asterisk if you tell someone a stock is going to grow 10x, they will view you as a naive optimist or a fraud. If you tell someone the market is about to crash because of a structural flaw, they will pull out a notebook and listen intently. The lesson progress happens slowly and incrementally, so it rarely makes the headlines. Destruction happens quickly and dramatically, making it impossible to ignore. Realize that while short-term setbacks are guaranteed, the long-term arc of human ingenuity trends upward. Hashtag chapter 17, when you'll believe anything. The more you want something to be true, the more likely you are to believe a story that overestimates the odds of it being true. The concept after the 2008 financial crisis, people believed ridiculous conspiracy theories because they desperately wanted an explanation for why their lives were disrupted. We create narrative illusions to make sense of a highly complex, random world. The lesson be aware of your biases. If an investment or economic prediction sounds exactly like what you hope will happen, question it twice as hard. Chapter 18. All together now. A summary of the core behaviors that change your relationship with money. Be humble. Less ego equals more wealth. Manage your money to sleep well. Your peace of mind is the ultimate metric. Increase your time horizon. Time is the most powerful lever in investing. Accept failure. Expect your individual picks to look messy. Focus on the total portfolio. Chapter 19. Confessions. In this final chapter, Morgan Housel reveals his own financial habits. The Housel strategy: he does not try to beat the market. He lives below his means, owns his house completely free of a mortgage, even though it's mathematically suboptimal, and invests his remaining money simply into low-cost index funds. The takeaway: he prioritizes independence and peace of mind over maximizing every single dollar. The one-sentence core philosophy: doing well with money has a little to do with how smart you are and a lot to do with how you behave.